Hi everyone, welcome to another Jackson Securities webinar. I am your webinar host, Caitlin Chung, and today we are fortunate enough to be joined by CFO of PointsBet, Andrew Mellor, as well as Head of Investor Relations, Stephen Foreman. Thank you so much to both of you for joining us. So today, Andrew will go through a presentation and then we'll have a short Q&A. And anyone that's watching live, you're welcome to pop your questions in the chat and we can go through them later. But I will pass it off to you, Andrew.
Thanks, Caitlin, very much for having us, and thanks to all the Port Jackson clients for taking the time to listen in today. As Caitlin said, I'm Andrew Mellor. I'm the Group CFO at PointsBet, based in Melbourne, and together I'm joined by Steve Foreman, who's the Head of Investor Relations, as Caitlin said, and Steve's based in Denver, Colorado. We'll just run through a quick presentation today. Just wanted to give you a bit of an update on the company and where we're at, and welcome any questions post the presentation. So Steve, we could turn to slide 4. Before I sort of dive into the building blocks that we reference on this slide, I'll just give you a quick intro and the background to our trading operations. We are a global gaming operator. We operate in Australia, the US, and Canada, and we've built those operations over the past 6 years since we were founded in 2016. We were founded in Australia, 2016. Our co-founder and group CEO is Sam Swanell, and he previously ran the TomWaterhouse.com business, reporting directly to the Waterhouse family, and also ran the Tassie Tote business prior to that, so deep wagering experience. The Australian business took its first bet in March of 2018, and we've grown to be circa a 5% market share player, online market share player in the Australian market. The Australian market is relatively large. It's about a $4.5 billion net revenue market, which for a population of 26 million is reasonably substantial. In Australia, we take fixed odds bets on racing, being greyhounds, thoroughbreds, and harness, and also on sport, obviously NBA, NFL, AFL, and NRL. Actually, interestingly, NBA is the biggest betting sport in Australia. Australian business has been EBITDA positive for the previous 3 years, and we're really excited with the recent launch of our new brand campaign. Some of you may have seen that with Shaquille O'Neal and the Inspired Unemployed. Turning to the US, prior to May 2018, fascinatingly, online sports wagering in the US was illegal. There was a piece of legislation called PASPA, the Professional Amateur Sports Protection Act, which prevented legal sports wagering in the US. The New Jersey government fought that legislation for a number of years, and that was repealed in May of 2018. And so New Jersey was the first move in the US to legalize sports wagering. The repeal of that legislation allowed each state to determine if they want to legislate sports wagering. New Jersey was the first mover, and we launched our US business in January of 2019. And a lot's happened since then. We're now operating in 12 US states. That represents circa 30% of the US population. We also have an iGaming product in the 4 states that allows legal iGaming, being Michigan, West Virginia, New Jersey, and Pennsylvania. So we really feel where we are in the US now is we are a true competitor. There's about 42 operators in New Jersey. We're the 7th largest operator with about 3.7% of blended online market share across the states that we're live in. And we really feel we've put that great stake in the ground, and we'll sort of walk through that a little bit later. And in Canada, Canada just recently legalized sports wagering. That market opened up in April. We were on the starting line in the province of Ontario only, where Toronto is the capital. Ontario has about 15 million people, and we've set up a relatively small team of 40 people to bring a really localized Canadian approach to that market, and we're pleased with the results so far. Just to talk quickly onto the building blocks. The most important one on this slide to focus on is the one in the center, the in-house market-leading technology stack. That was always our first stake in the ground when the company was started back in 2016. We see it as our main pillar, our right to win, particularly in the US, which I'll explain. But the guidance here is that we want to be able to deliver a product experience, an excellent product experience for all our clients across the globe, and owning your own technology is certainly a centerpiece of that. We feel like we've built a North American product that is highly rated, and I'll speak to that in a moment. And it really justifies the level of investment that we've made in the technology, but also in the marketing investment across the US. It's really important to note that North America will be the market that delivers the global gaming growth over the next decade. There's a lot of mature markets around the world, but North America is going to be the one that delivers that growth. And you definitely want to be there now to take advantage of that. Just to also touch on a couple of items on this slide. As I mentioned, the Australian business is profitable. iGaming is an important part of the story in the US. iGaming won't legalise as quickly as sports wagering will, but iGaming is legal in 4 states plus on Ontario, Canada. We are the official sports wagering partner of NBC Sports. We did a deal with them 2 years ago, a 5-year deal, so we're 2 years into that with 3 years to run, and really pleased with the relationship that we've built with NBC. And we ended FY22 with $472 million in corporate cash in the bank. Turning to slide 5, please. What we're trying to provide here is sort of a global view. I mean, we are listed in Australia and we were founded in Australia, but this sort of paints the picture that we have built a global team and a global operation. And it's not just from based off a global tech stack, that's across really all departments. When we IPO'd back in 2019, we only had about 120 staff. So we've been very busy building the scale of the team to be able to compete across the globe. And we sort of are starting to reach that point of scale. I said on our recent earnings call that the velocity of hiring will significantly reduce going into FY23. We've obviously gone from 120 to 627 very quickly. And we feel that we're getting to that point where the hiring can reduce and we can really bring a lot of operating leverage to the business. And as you can see from this, you know, we've got more staff outside Australia than inside Australia. And that's sort of been very deliberate to make sure that we have a 24/7 follow the sun model. I mean, you can see behind me, I'm sitting just outside the trading room here in Melbourne. Steve's sitting in the trading room in Denver. We have traders in Dublin, Toronto, New Jersey, Denver, and Melbourne. And it's very much a follow the sun model. So when it's nighttime here in Australia, the US traders can trade for the Australian business and vice versa. And that's very important. And also just to highlight the office we have now in Dublin, in Ireland, where we've got 59 FTEs. That was the result of purchasing Bannock Technology, which is they were the experts and have really driven our in-play US trading models and business. And we'll speak a little bit that later. But what having an office in Europe does for us is it allows us to be able to recruit into the experienced European market. Whilst we're not operating in Europe, we can obviously recruit some really experienced staff in Europe because it's a very mature market. Next slide, please. I won't call out all the individuals on this slide, but this is the market leading management team that's been built. And I think the first thing to highlight, just look at the flags. It's across the globe, and that's very, very important, bringing experience from across the globe. But what I will call out is some of the expertise that we have from the organisations individuals have worked previously, cross gaming, media, banking, etc. Now we've got Stars Group, Scientific Games, Aristocrat, William Hill, TomWaterhouse.com, Racing.com, Paddy Power, Betfair, Bet365, CBS, Credit Suisse, Rogers Media. So we really feel that we're building that team out, and we take a very much a think global, act local type approach. Next slide, thanks. So we're live in 12 US states from an online sports betting perspective, 4 from an iGaming perspective, plus Ontario, Canada, plus Australia. We don't think of that as a 3 countries approach. It's 14 jurisdictions because each state of the US is very different. As I mentioned earlier, it's a state-by-state legalization across the US, and every state has its own regulator, has its own gaming rules and regulations, has its own specific betting requirements. Some states you can bet on college, some states you can't. Has its own responsible gambling requirements. And so you definitely need to think of this as a 14 jurisdiction operation, and we'll grow to more than that as we roll out across more states of the US and potentially more provinces in Canada. But that's where the in-house technology strategy comes to its fore, because as you can imagine, if you have a client that is moving between Illinois and Indiana, he wants a seamless experience. He doesn't care about the requirements of the business. He just wants to be able to move between states that are legal and be able to place his bets. And what we also then have to think about is the operational side of the business, the back end for all our operations, trading, and other staff managing the business. You want to make that as efficient as possible, and owning your technology creates that sort of magic in the middle, if you like. So this is where we're live. Our next states, you can see, we plan to launch are in yellow, being Maryland and Ohio, and the red states are states that we have access to or haven't necessarily launched yet, or some are like for instance, Texas are not yet legal. One thing to point out is that you just can't turn up in a state and become an operator. Some states have restrictions on the number of licenses they offer. 3 states in particular are hard to enter: Illinois, Pennsylvania, and New York. And we're pleased to say that we're operating in all those 3 states. Next slide. Thanks, Steve. Just quickly to make a quick call out on a couple of highlights. What's happened in the second half of FY22. January, we launched New York. That was obviously a big thing. There's only 8 operators in New York. We also launched in January with a first sports book to offer live in-play same-game parlays, or multis, as they're known as in Australia, options for NFL and NBA. We were pleased that we were able to launch in Ontario, Canada in April. I'll speak a little bit later, but we ranked 3rd in the Eilers & Krejcik US app testing, won the top sports betting operator at the North American Awards, and I'll talk later about a strategic investment we received from Susquehanna. Next slide. Thanks, Steve. Just to quickly talk about some of the trading metrics from FY22. One thing to point out, a question we often get, and it's a fair one, is why the gross win margins, net win margins are higher in Australia than they are in the US. As I said earlier, in Australia, we can bet on racing and sport. In the US, at this stage, it's just fixed odds sport. Racing yields at a higher gross win or trading win, and therefore that's the reason Australia yields a lot higher. The other interesting piece about Australia versus the US is that in Australia, if you want to place a bet after a game has started, you need to call up one of PointsBet's operators to place that bet. Whereas in the US, you can bet on your app after a game has started, which we refer to as in-play, and Steve will sort of talk to our strategy around in-play a little later on. But just to call out a few numbers on this slide, really pleased. We did over 5 billion in handle or turnover. That's the total number of cash and promotional bets that we took for the financial year of 22. We grew revenue as a group by 48%, up to 309.4 million. Australia, obviously coming off a pretty big base already, was able to grow it at 30%, and the US overall, as we're starting to roll out more and more states, was able to grow at 122% year on year, which is important to talk about the growth trajectory of the company. And I think it's important to point out it's very competitive, and I don't think that we certainly want to make that clear. Australia is a competitive environment. We started from nowhere back in 18, and we've got to 5%. We're at 3.7% in the US, but the competition is strong, and particularly in the US. Is strong because everybody recognises what the next decade means from a global gaming growth perspective. North America is where that global gaming growth will come from. And now's the time, as I said earlier, to put a stake in the ground. And we're really pleased that we took that opportunity back in 2018, 2019. Next slide. Thanks, Steve. Just to quickly touch on the P&L, I mean, investing in a business into a very large market does take upfront investment. It has required a lot of capital. Because that opportunity is so large, we needed to make some significant upfront investment, particularly in market access into US states, into US marketing to build a brand and a database, to build our global staff up from 120 to 627 at the end of June, and also investing in that technology platform. So, that's the reality of a growth company. You need to be able to understand that piece, and we've certainly feel what we've built the last 3 years, building that incumbency in North America, building that global team. And what we're looking for now is really focusing on delivering North American net win. that's the focus for the business. We've got ourselves into the states that we're operating. Now we need to deliver net win growth to really sort of take advantage of that opportunity that's in front of us in North America. Next slide, thanks, Steve. Just to quickly touch on the technology piece, you know, this is a great slide. It sort of highlights what the importance of the technology. It's obviously hard to get that across on a PowerPoint deck at times, but you know, we think about one global platform, a single code base, scalable and secure, outstanding UX and UI, proprietary algorithms. It really gives us sort of a 30,000-foot view of our technology differentiators, and some of our technology leads talk to some of the following points I just wanted to highlight. You know, one issue organisations do face when they're scaling and in a growth organisation is avoiding tech debt, and having a single global platform built on modern code allows us to avoid that significant tech debt. You know, we utilise our global team, we utilise microservices. It allows us to quickly make architectural changes and decisions, add and change functionalities without making complex changes, and that's very important from an efficiency perspective when you're operating in a number of different jurisdictions. And it's allowed us to make, you know, ensure we're able to manage significant betting volumes, particularly on days like a Melbourne Cup, which is coming up, or a Super Bowl, where the systems have performed very, very well. Next slide, thanks. So just a very touch base on some external validation. I mean, it is external validation. It doesn't mean we're going to stop, but you know, the Eilers & Krejcik are a very well-regarded US gaming analyst firm, and they do a ranking every quarter of all the apps in New Jersey. As I said, there's 42 apps, and it's from a technology perspective. You can see the 5 categories that they judge you on, and we're really pleased that we've been ranked 2 or 3, I think, for the last three or 4 quarters, against very large organisations. FanDuel is owned by Flutter. Flutter owns Sportsbet in Australia. DraftKings is an $8 billion company. You can see MGM 7, Caesars is 8, Wins 9. So you know, that's real validation of that in-house strategy, and something that we certainly feel like we can point to as a validation for that technology strategy that a lot of others are starting to follow. I think it's worth reading out, you know, the overall comment. The contender from down under, PointsBet, is no longer a surprise among the elite sports book apps. PointsBet has the best UX, so they're number 1 in features and have an extremely strong core, backed by one of the premier customer service experiences around. And you know, that's great validation of the strategy. But as I said earlier, we don't stop here. We keep going, but it is a sign that we feel we're heading in the right direction from a technology perspective. I'll pass to Steve now. As I mentioned earlier, in-play is a big part of the strategy into the US, and over to you, Steve, to walk us through it.
As Andy mentioned, having control of your own tech stack is extremely important, particularly if you're pricing various markets when the actual game has started. And in the UK, in-play represents around 70% of all the handle, of all the bets that are taken. So we at PointsBet we've taken the view that that's where we think the US market will head. And if you think about the cadence of US sports, especially if you're talking about all the timeouts you have in NBA, in NFL, you know, in between there's a 40-second play clock in the NFL for the quarterback to snap the ball. You've got NBA, there is a 24-second shot clock. And in Major League Baseball, there's a 15-second time limit between pitches. And so there's a plenty of opportunity for people to put these micro bets on, which is what we've been looking for. So, and what we've been doing a lot more, producing these capabilities, particularly in the last 12 months. We've actually focused our intention, or focused our algorithms and our product on the 4 major sports so far, with NFL, NBA, college basketball, and Major League Baseball. We're rolling out NHL and college football in the coming half. We basically price all our own odds, and we use our in-house pricing algorithms to come up with that pricing. We use the data feeds from particular leagues, but we do all our own pricing, and that's what's called the odds factory, and that's how we make all our own markets, and we're pricing all those markets. And as you can imagine, the complexity involved and the amount of work that goes into how many markets there are involved, particularly if you're looking at markets, for instance, like lightning bets, where you can bet on in basketball the next team to score, or the next pitch count, or particularly with football, what the next drive's going to be, or even the next snap, or what the next play is going to be. And so there's one thing to have the depth and breadth of markets, but I think most important thing is to have those uptime. So there's nothing worse than going to put on a bet and you can't put on the bet because this particular market isn't available. So we've particularly in the NBA during the last set of playoffs, we had most of our NBA markets are up over 90%, which is a fairly strong statistic across our peer group. So if you look at in play as a percentage of overall handle for the previous quarter, for the fourth quarter, that was 63%, and that's going back, and that's up from 46% for the full year 22. So I'll hand it back to Andy.
Thanks, Dave. Appreciate that insight. Could you pass to the last slide, please?
Sure. Right.
So I thought just to finish, it'd be worth touching on a recent strategic investment we received from SIG Sports Investment Corp. SIG Sports is a subsidiary of Susquehanna International, which is a very large private proprietary financial trading firm. They trade the most US listed options, for instance, in the US markets. They've also got an arm called Nelly Analytics. Nelly Analytics trade proprietary on betting exchanges, and we came up with a deal with them where we issued them $94.2 million worth of equity in PointsBet, which is about a 12.8% stake in the company. That was issued at a 15% premium to the 5-day VWAP to June 17. And together with that investment, we've signed an exploratory agreement with Nelly to sort of scope and develop terms for Nelly to provide PointsBet with some sports analytics and quantitative models to focus on our pricing, and as Steve spoke to, in-play pricing in particular on US sports. So, you know, we're very pleased to get that deal done. Getting corporate deals done in this financial market's not always too easy, but pleased to get that done and announce that back in June. And with that, Caitlin, hand back to you.
Thank you so much, both of you. This was a really good introduction for especially our audience who were not familiar with your company. So thank you for such great insight. I just have a few questions. The first being that in Australia, the recent POCT tax changes in Queensland and New South Wales specifically, what are some of the levers available to partially mitigate the higher impacts of this?
Yeah, thanks, Caitlin. You know, I think one of the things that's happened over the last few years for us at PointsBet is obviously a huge amount of focus has been launching into the US and ensuring that we were able to roll out those states and deliver a really market-leading product. One of the fallouts from that has probably been that we haven't spent as much time focused on our Australian product because you have obviously a finite number of resources. And so what we are doing, and we've restructured some of our product teams and technology teams to really bring more immediate focus to Australia. And we definitely feel that a lot of the operational and focus changes will be able to assist us through this year with, there are challenges, obviously, from increasing taxes in certain states. Obviously, the market, as I said earlier, continues to be very competitive. But we feel like some of those operational levers that we can pull internally, and the ones that we actually plan to pull, can offset some of those headwinds from tax increases.
And can you run us through your technology strategy, specifically the benefits of an in-house technology strategy?
Yeah, and I think sort of as I articulated to, owning and controlling your tech is really your lifeline. The alternative to not owning your tech is outsourcing your tech to third parties. And that sort of means that you get in a queue when you're wanting a change. You don't really own your product roadmap or your destiny as much as you would like. And in particular, in the US, when you're operating so many different jurisdictions, you really want to be able to be as nimble and agile as possible, particularly when it comes to your core asset, which is the technology piece. So that's why it's a longer journey, slightly more expensive upfront investment required to get to that point. But that's the path we chose. And interesting, a lot of our larger competitors in the US are starting to move off third-party vendors and trying to in-house their own their own technology. That's not an easy task, and it does take time and capital.
Yeah, I'm really impressed that all the technology is made in-house by you guys. That's really great. And final question, can you describe the competitive landscape in the US, especially going into the peak customer acquisition period for the start of the NFL season, please?
Yeah, sure. I mean, I think just to frame up, I mentioned there's about 42 competitors. New Jersey, different states have different numbers, but just to sort of frame up where we stand, I mean, ahead of it, FanDuel is the largest operator owned by Flutter, which owns Sportsbet, not surprising, and originally a DFS operator, then DraftKings, which is one of the large DFS operators. MGM has a deal with Entain. Entain owns Ladbrokes and Neds. They have a joint venture where they use Entain's sports wagering expertise in the MGM brand and database. So there's some pretty strong competitors in front of us. Then you have three other Caesars, Penn National Gaming using the Barstool brand, and Rush Street. So we feel we're in the hunt. FanDuel is obviously the largest and will probably continue to be very, very strong. With, I think generally the strategy we're taking is a really disciplined strategy through the NFL season, really targeted strategy, trying to make sure that our marketing spend is utilized as efficiently as possible in the right areas on the right assets. But we'll be able to speak a bit more to that on our quarterly call in later this month.
Thank you. With that, we'll wrap up here. Thank you so much again, both of you, for joining us. To those that didn't make our live webinar, you're welcome to email me any questions and I can pass them on to Andrew and Steve. But thank you so much for joining us.
Thanks, Caitlin. Thanks all. Appreciate it.
Thank you.